In this episode, I have my friend Brian Luebben on who discusses investing in Main Street businesses, and we compare that to investing in real estate. So, this is a great episode where we put some pros and cons out there and actually have a bit of debate ourselves, which I think is really healthy to look at all options when you're making investment choices. All right. So, Brian, welcome back to the show.
Thank
I
you.
wanted to ask you how everything started. You're living your life, spending 2 months out of the year at a time in different countries, organizing entrepreneurs and helping people quit their jobs. You've wrote the book on quit your job, and you have the website quityourjob.co, right? This is a great community you've built. It's been amazing to see you do it, but it all started with a real estate deal, I think.
Yeah.
Tell me about that first deal, and I want to see how it evolved into what you do now.
Yeah, absolutely. So first off, I've got quityourjob.co and it pisses me off I don't have quityourjob.com. So
It's not holding you back from my perspective.
yeah,
Seems like things are going great.
Yeah, brick by brick. Yeah, you cannot start a business unless you have the domain. Psh, of course not. So yeah, man. Yeah, my backstory, my origin story was, I was in corporate America. I was number 8 out of 5,079 sales reps. And then I just I came to the realization that it just wasn't a ladder that I wanted to climb. A lot of people have what's called sunk cost fallacy, to where it's in their corporate job or in a real estate deal or even in their marriage, all these different areas of life, they are climbing this mountain and you make it 75% of the way up the mountain. And all of a sudden you realize that the path is blocked. And the only way to the mountaintop truly is to go all the way back down to the bottom and climb up another path.
Mm-hmm.
And that prevents a lot of people from doing that. And so they just kind of sit and ruminate next to that boulder. And they like, oh, well, give it my best shot. Guess I'm just going to hang out here.
Right.
And that's most people's corporate careers. That's most people's marriages. That's most people's lives.
Yes, but something didn't sit well with you. Like, what made you finally get up from your seat and go do something else?
Yeah, 100%. So I looked at my boss's boss.
Yeah.
And so I realized that that was going to be me in 5 years. And that was not a lifestyle that I wanted to live. When I was looking at him, I was just like, dude, you are working more than I am in tighter increments, Zoom calls every day, not seeing your kids grow up. That's not the lifestyle that I aspire to live.
Right.
And so I was just like, I got to do something more. And so I was making $250,000 a year. And I also realized that that was kind of my ceiling. So I was just stuck. And it's really difficult when you're stuck in good enough, because unless you have a significant driver of pain or a compelling enough vision of the future, you're not going to make any changes when things are good enough. And I think a lot of America right now is stuck in this good enough zone, to where they're working a corporate job that's good enough, their life is good enough, their relationship's good enough, and they don't realize that the stability and the security that they think that they have is not actually true. Because before, the conversation was, go get you a good salary, a good paying job, and a 401k. You are safe, you are stable, you are secure. But now in 2025 and beyond, that has since shifted to where I would actually argue that if you only have a salary, if you only have a 401k, that's actually the riskiest position to be in today. You need to have side hustles. You need to have side income. You need to have different streams of income coming in so that you are protected and your family is protected if your company decides to lay you off, go under, or like just a simple change of management could completely eliminate your position. So we run Action Academy now with 436 members, and that helps corporate high professionals replace corporate with cash flow through business acquisition and commercial real estate. And as we're going through that, we are seeing member after member after member working 6-figure jobs, $300,000 a year, worked for 7 years, all of a sudden overnight, gone. Job is gone.
Mm-hmm.
Restructure.
Yeah, because you helped them figure out how to buy a business or buy real estate,
they
right?
are fired.
Oh,
from
they're
their job.
fired. Gotcha.
Yeah, the position is gone. And
Okay.
so had they not had a community, had they not had some deal flow themselves, they would have had to go get another job.
That was something I was very much excited about my corporate path, but I picked a vision in my head of being like a VP at a Fortune 500 company. They can make $500,000 a year at least. And I was like, man, but what if somebody doesn't think I'm good enough? It's like I can raise to that level, but then if they decide that thing I'm working on or I'm not good enough, like it can go completely away. So then I have to go do something else.
Correct.
And that was definitely a big motivating factor for me to go figure out my own path.
Yeah, and you mentioned the real estate deals. The first real estate deals that I was doing was I was just buying a house a year. I was saving up my money, I'd buy a house a year. And I thought that that was the path. I thought that that was something that would get me financially free, because I just didn't know what I didn't know. I didn't have access to people that were 10 steps ahead of me. I didn't have access to these millionaires, these mentors. I'm like, how do you guys do things? And so I just did the best that I could with what I had.
Okay.
And that's where a lot of people are today, and they don't realize like the economics behind that. So in today's market, best case scenario, if you want to cash flow $200 per door, you're going to need 50 rental properties cash flowing $200 per door to produce like the $10,000 a month that you're looking for.
Mm-hmm.
So even if you buy a property for $200,000 for $50,000 down, 20%, you're looking at $2.5 million of invested equity that you're investing take home after tax
You make it sound really bad.
to be able to pull it off. Yeah.
Yeah.
So it's just like, for us, I was like, you can do commercial deals or you can buy a small business. And then that is our preferred path to doing it faster. So now we help people do that within 1 to 4 years. And that's the goal.
So talk about your, well, I did it with 15 rental properties, by the way, the 10,000, 12,000 a month net. But anyway, why do you pick commercial as one of your options and not residential? Or what's so great about commercial? Or tell us about the average commercial deal.
Yeah. And I mean, again, like residential, if you buy correctly and if you buy it the right way, of course, like there's variability. We're just using like the simplest math possible for $200. But like we have people that do short-term rentals. Like
Yeah.
my buddy Michael Elefante does hundreds of thousands of dollars through luxury short-term rentals. So pick your poison is whatever way. But for us, what we like to see is we're like, if all roads kind of lead to commercial, so like multifamily, self-storage, mobile home, like I'm now in luxury hospitality. Like that's my preferred flavor of choice that I really enjoy.
Oh, yeah. I saw you had bought a brewery or some type of bar.
Oh yeah, that's so distillery. So we bought a distillery, but then that's like small business acquisition. Yeah.
Yeah.
So we're kind of right between like my cash flow strategy is through small business buying, and then my like wealth building and tax strategy is through luxury hospitality. So like boutique hotels, like residential, like experiential hospitality,
Mhm.
stuff like that. That's kind of my jam for that. But when it comes to why commercial, it's because we can get people to work on teams faster. We can get people to leverage capital faster and just take people from playing a single player sport to a team sport.
What do you mean by that?
Because in the very beginning, everyone's just on an island, just like kind of, driving for dollars. I mean, DealMachine, like that's what we do in the beginning is like you go drive for dollars, you do the thing, you save up your own money, maybe you have a private investor or two. But then once you move up into the commercial deals, it's like you're doing it together with a team. And it's just a lot more fun, from a front perspective. It's just more fun. You have a lot more experience, and then you can kind of reduce the risk a little bit because you have different perspectives and different experiences together working with you on that deal. So everything I do is through partnerships now. And so we try to get people up to that level as fast as possible because they can compound their wealth and compound their cash flow significantly faster than if they were just doing it by themselves.
What if the partner, and then this is a good opportunity to play devil's advocate. Like it's so important for me to own all these properties myself because I don't want a partner because it's kind of like more serious than a marriage. It's like, well, what if the partner and I own this business and they want to go to 100 million and I just want to go to 10 million and then I'm working really hard for my goal, but they aren't. And now I resent them because they're still getting half the profits from my business. I kind of want as little partners as possible.
Sure.
What would you say for that? Or is it just two different people, two different goals, right?
There is no one size fit all. Like personal finance is personal. So I can't tell you that the way that you want to do it is right or wrong because it may be right for you. I can't say that my way to do it is right or wrong. It's just what's right for me. The only perspective that I give is after interviewing over 879 multimillionaires, everybody that I know that's 8-figure, 9-figure and above. I can't really name many of them, if any, that have done it all themselves with zero partners. Like Jeff Bezos owns 13% of Amazon, and he's a multi-billionaire from that perspective.
Well, it went public, right?
Well, correct. But even before that, he took on private capital and investors. So to your point, there's two ways to mitigate for that because it does happen. And I've had friends that it's happened to as well. So it's all about going into it like with eyes like wide open and knowing what you're getting into because everything revolves around the operating agreement. So especially when it comes to like business acquisition, which is my bread and butter, there is nothing more important. People stress about the LLC. The LLC is the simplest, easiest document and like easiest process to do. Like the LLC is elementary. What matters more than anything is the operating agreement, the OA. So in your operating agreement, that's where your lawyer is like really, really sophisticated and really, really involved. And you guys are detailing out step by step, piece by piece, roles and responsibilities, who owns what. You need a chest to poke and a throat to choke for each role and responsibility and function of your company. And you also need buyout clauses. So if I'm buying a small business, which I buy all my businesses with 2 to 3 partners,
Mm-hmm.
I am making sure that if somebody is not holding up their side of the bargain, we're able to point to the operating agreement and say, here is the process for us removing you from this and buying out your equity at this rate, at this valuation level, and through this due process. And so that's all written out in your operating agreement from the very beginning. And you're having the conversation with your partner prior and you're saying, what are your goals? Like, what are my goals? Do we mesh together? Do our personalities fit? Do we have complementary skill sets?
Mm-hmm.
Because partnership is 1 + 1 = 10 if you do it correctly.
Mm-hmm.
So, I mean, I would not raw dog partnership ever, like, and just say, oh, let's partner because it's convenient. That's where it's a recipe for disaster. But, for me, like, I put a lot of pre-work into that relationship. It's
Right.
like pouring a strong foundation to build a taller skyscraper.
Let's debate Jeff Bezos as the example you brought up. I mean, he scaled one business, right?
Mhm.
But it sounds like you're doing lots of different business purchases with many different partners. So why did you feel that was the right choice for you versus focusing in on like one main thing?
So how I do things is like I still have done things the way that I teach.
Mm-hmm.
So the way that we teach is, you grow one thing, one strategy, one business. That is your core business. And so I utilize what one of my mentors taught me. This guy's multi-$100 million guy, $250 million net worth. Now his name's David. He lives here in Austin. Like, Osborne, right? I think
I
you.
haven't met him, but I know of him.
Yeah. So Osborne told me one time when we were together, he said, how wealth building works is called plant trees, manage orchards. So every single business, every single rental property, every single investment that you make is like planting a seed into the ground. So you got to make sure that the seed is fertile, that the soil is like well kept and moisturized so that the
Mm-hmm.
seed can grow and sprout. And as soon as it grows into a sapling, then it's your job to protect the sapling and to make sure that it is fortified away from and protected away from bad economic environments, bad partnerships, bad actors. And you protect it yourself as it grows into a tree. As soon as the tree is strong enough to bear fruit on its own and stand still on its own and strong, at that point you can move on and take the fruit and take the seeds that asset has produced and start investing into other projects and other seeds
Mm-hmm.
and other trees. So eventually you plant so many trees that you hire somebody else to come and manage the orchard. So that's how I learned about partnership.
Okay.
So how I did it was I spent the last 2.5 years building Action Academy.
Mm-hmm.
Action Academy is my main seed. It's my main tree. Like I said, I'm going to do no investments, no nothing, no partnerships. I am focusing purely on Action Academy. And I was like, I'm going to grow this mastermind up to the point where it's bearing fruit on its own. And I have a team that's able to manage that. And that lets the tree stand on its own. So now, 2.5 years later, I've got the best access to deal flow, lead flow, and talent flow
Mm-hmm.
through my community. And now I invest into those people passively to buy minority equity positions in these businesses to where I am not the primary operator. I primarily operate Action Academy. Everything else is through partnership where other people are the front runners of that. And then I get to benefit from the economic upside and the cash flow as a passive partner, either from a growth perspective, an advisory perspective, or a capital perspective.
Got it. So you're not actually managing the distillery. You're
No.
just investing money into that as like a purchase price, right?
Yeah.
Of whoever's buying that.
And to your point, like I also have friends that, have 5 companies or, 4 companies or 3 companies, or they want to build this hold co model and do 10 companies. And I'm like, okay, that sounds terrible to your point. Like I want to keep my main thing, which is what you did with DealMachine. You're
Mhm.
like, this is my thing. I need to build this company up. And like, that's what we're doing with Action Academy right now. We're like, we should hit 5-6 million ARR this year. And we're pushing for 10 to 12 million this next year. And so like, that is our baby. And I've got a team of 12 now that we're growing up to 20. Like that is my main thing. And now the only way that I can scale anything else is through partnership.
Got it.
It's the only way. So partnership is a skill, and leadership and partnership.
So you're
are
like a private
skills.
money investor to the people who are buying assets and businesses. And of course, they're hearing from you what to do, right? They're in your group.
Yeah.
Yeah.
So I also invest externally with some partners as well. So number one is like, yes, you can be the capital partner. And then sometimes I'm able to take a little bit additional equity for being like an advisory member on the board and helping them with marketing, with scale, and with sales.
Yep.
So I'm not going to be the person that you bring in to help your back end operations and systems.
Mhm.
That's not my forte. But if you need help generating eyeballs, both organic or paid, and you need help building a sales team and conversion ladder, like I'm really, really good at that. And so that's what you look for in partners. So everyone that I partner with is somebody that is really, really operationally sound and really, really good with systems, processes, and ops. Because if two of you are doing one job, one of you isn't needed. And so like that's the role that I play in these partnerships. And then also, yes, like passive capital partner. Yeah.
So, what are some other deals that you've invested in?
So right now we're under contract on a gym, like 2 franchise units in Nashville. So we're opening up some gyms in Nashville with one of my partners. That's going to be super cool.
Okay.
We're under contract on a tourism company in Alaska that does like $2.5 million of revenue. And dude, they don't even do anything during the summer. It's
Okay.
only during the winter. So we're
Wow.
buying that one with 3 partners. And so we're excited to close on that one. I believe in August, we're closing that one.
Right.
We just bought, we did a tuck-in strategy. So a lot of people may have heard of roll-ups before, but we did a tuck-in, which is like the initial strategy of a roll-up. So what that means is we bought a company that cleans kitchen hoods in Kansas City. So it's like you go see a commercial fry cook, and then you've got the kitchen hood over, and it's like sucking up all the grease.
Mm-hmm.
So we bought that company, and then we bought a competitor that's in the same local market, and we absorbed that into our company. So we did it through acquisition. So
Got
we
it.
bought 2 kitchen hood cleaning companies in Kansas City,
Mm-hmm.
and now combined together, they do about $3 million a year. And so that is called the tuck-in strategy. And then the roll-up strategy is if we were to just continue buying more and more and more kitchen hood cleaning companies in the same industry, and then just using like vertical integration and economies of scale to grow that up to about $3 to $5 million of profit, EBITDA, so that we can sell that to private equity for
Okay.
like an 8 to 10x multiple. Which may be a little like insider baseball, but like that's the roll-up strategy that people do with private equity.
Normally, a business would get like 3 to 4x, right, in that type of business range. But what makes it get the higher return on the multiple?
So once you get up to 5 million plus in EBITDA, especially in a service company, that's the sweet spot where private equity will actually start biting at it.
Mm-hmm.
So beneath that, you're still kind of like in the mid-tier mainstream, like main market, Main
Mhm.
Street, but then Wall Street will bite at it at that point. So anything but like anything beneath that 5 million EBITDA, like your multiple is still going to probably be like around 5 or 6. But once you get up past 5 million, it could get up to 8 plus, and you're in software, so your multiple's even higher than that.
Are there other tiers above 5 million where there's just more buyers for that type of product? Or
That's where kind of all the buyers come in.
Mhm.
So that's where private equity plays. It's
Mhm.
5 million plus in EBITDA. Anything beneath 5 million in EBITDA is kind of where like we live. So we do normally like $1 to $3 million in revenue top line. And then we buy normally like 500,000. Like the biggest deal we bought was maybe like 700,000 EBITDA. Like they're not large deals from a
Mhm.
private equity perspective, but they're great deals that can get somebody out of their corporate job.
So when you buy something that has like 700,000 in profit for a business, let's say was it the distillery or was it the hood cleaning company?
I mean, like a few different ones. Those are
Yeah.
all across the board.
What would buying that deal look like? Like, can you get a loan for the value of the business, which is what, 3 to 4x EBITDA in that price range?
Normally, if you're buying a company, you're buying a company between 3 to 5x multiple of profit.
Mm-hmm.
So anything beneath $1 million in profit, you're buying what's called like SDE, seller discretionary earnings. So it's just another like easier word for profit. So
Mm-hmm.
EBITDA is like the fancy word for profit, because that's probably what you guys are using now in DealMachine. So we buy for SDE. So when you're buying something for, to use easy math, $500,000 at SDE, you're normally going to buy that for maybe 3 to 5x. So that's going to be $1.5 million to $2 million purchase price. 10% down, usually through the SBA, which is the government-backed loan. It's
Mm-hmm.
like think about it like a mortgage for a house,
Right.
and you're buying that 10% down, and then the bank funds and finances 90% of the deal.
Yeah, it's actually less down than you would need for a house typically.
Correct. Yeah, and then for commercial properties, you're looking anywhere between 20 to 30% down right now.
Yeah.
Yeah, so for a business, it's 10% down, pretty standard. So you're bringing $200,000 of cash to the table. So then that's where I can come in the deal and say, okay, you don't have $200,000 in cash laying around, but you're a wonderful operator. You know the deal. You brought the deal. You negotiated the deal. Like I'll back you. And then that's where I can come in with $200,000, and then basically the operator's buying the deal for free.
Mm-hmm.
And so they're able to run this deal. They quit their jobs and they're like, okay, cool. I'm going to be the CEO of this company. And then I get to participate in the upside, and then kind of cap the downside by, preferred structures and everything. But that's a little
If you brought all the money and they found the deal, what would the split on ownership be for that case typically?
So there's an aggressive way that you can do it, and there's like a chiller way to do it. I don't think that there's a right answer. For me, I do the chiller way. Like you can go into a real estate deal and you're like, I'm bringing the money. I want 50% of the deal. Like I'm giving you 50%. Like that's one way to do it. With the business, I'm not taking 50% of their business. So
Okay.
I'll take normally between like anywhere from 12 to 19%. So I'll keep it beneath 20%. So 12 to 19%, I'm taking of the deal. And then so I've done some deals with debt where I'm more of a debt partner, how I get paid back, and some deals where I'm just like the equity that I'm participating in the profit share. So normally between like around probably 14 to 15%.
How did you pick 14%?
So what I did was I was like, okay, cool. So if I'm putting 10% down in the business, like that's already 10% right there of ownership that I get.
Mm-hmm.
And then I also want an equity kicker because this is your first deal and I'm going to be a lot more involved, like monthly, like helping you with the day-to-day with questions, and there's more risk associated
Yeah.
because it's
So
your
I would
first
expect you
business.
to do more actually.
Yeah, exactly. But for me, I want my people to eat. Like I want my operators to eat and I want them incentivized and I want them to have enough meat on the bone for them to like provide for their families and to leave and replace six-figure jobs.
So do they get a salary or are they living off of that portion of the profit?
Both. Yeah.
Okay.
So I mean, most of the time, like these people are able to pay themselves $100,000 salaries plus have all 85% of the benefit of the profit.
Mm-hmm.
So like for me, it works with the deal, it works with the SBA, it works with the lenders, and then I get to benefit normally 20 to 30% cash on cash for my money. So my goal over the next 2 years is to invest $2 million in equity across that. I'm about $500,000 invested right now into businesses like this, but invest $2 million into equity passively and then get a 20% passive cash on cash, and then so that'd be $400,000 passive.
Got it.
So that's my overall like business strategy. So I don't buy anything that's like massive or juicy that I'm going to take 30%, 40% of, because no matter how passive you say you are at that point, dude, you own 40% of the company.
Mm-hmm.
You're not going to be passive.
Mm-hmm.
Like you're full of crap if you're saying you're going to be passive at that point. But if I've got 15%,
But you have the same dollars invested either way.
yeah, but still, like for me, I like the structure, and also it's a no-brainer structure if you're on the tail end of it. And if you're going to an investor and you're like, look, I'm buying this company, I'm going to give you 50% additional equity, from what you're doing, like a 5% equity kicker. Like it's a no-brainer
What does
deal
that mean actually? 5%
for an investor.
equity quick.
Well, I mean, because you get 10% for your deal, and so you're getting a 50% premium of equity, so you're getting 15% as an extra kicker for them just to make the deal sweeter.
Okay, so it's me and a guy, and the guy found the deal, and I'm giving him the money for the down payment on his business he's going to buy.
Mhm.
And then you're saying I take 15% equity,
Mhm.
but what's the kicker? I'm not sure. I understand.
So you're putting 10% down. Therefore, you are buying 10% equity in the company. So
Got
as
it.
an extra additional thank you for doing this, like I'm going to make the deal even sweeter, I'm actually going to give you 15% equity rather than 10% equity. So that means that you get 15% of the profit rather than 10% of the profit. Or if you structure it like debt, then you're going to be able to get 15% of the net proceeds at sale rather than 10%.
Yeah.
So it's
Okay.
just
I got
extra
you.
equity.
Yeah.
Yeah. Or it's like same thing as if you're like on the advisory board and somebody's like, we'll give you 5% to come on and like help us like here. But again, like this is also like we can kind of bring it back down to earth if we want to also. I mean, I don't know who we're speaking to here, but either way.
I'm just curious
Yeah.
actually how everything's working over there.
Yeah, but that's the normal structure that we do. Now, I don't know if that's the normal structure overall. I'm not sure. It's kind of the wild, wild west out there. You can kind of structure it however you want to.
Gotcha.
Yeah.
So, and then are these people, they're like quitting their job and finding this business? Is there a filtering process you use to be like, yes, I know you found the business, but like, how do you select like who you're partnering with?
Yeah, so I underwrite. You have to play to your strengths. So a big difference between corporate and working a job versus employment is leverage. So yeah, let me rephrase that. The difference between employment and entrepreneurship is leverage.
Mm-hmm.
And so in corporate, you're taught to work on your weaknesses to become better balanced, more well-rounded. But in entrepreneurship, you really need to focus and double down on your strengths and then hire and delegate and partner with your weaknesses.
Mm-hmm.
And so for me, I'm not like a massive underwriter. Like if you put me in front of a spreadsheet, I can do it good enough to be dangerous, to know what's a good deal and a bad deal and a great deal. But I'm not going to spend 5 hours like researching nuance. So what I underwrite is people.
Mm-hmm.
So I look for operators that I know, like, and trust, that are hungry, that normally have something to lose too. So it's like, for my people, I'm not looking for someone that's comfortable, that's doing this as a hobby because they think it's cute. I'm looking for somebody that I'm like, dude, you are competent as hell. You're confident as hell. And, and you just had your first like daughter, and so there's something to lose. Like, there's something to fight for. So like the gym that I'm purchasing, like the guy, I know him. I like him. I trust him. I think he's super smart, super competent. And him and his wife just had their firstborn daughter. And now his wife is also going to be leaving. They're going to run the gym together. They get $100,000 salary. That's freaking sick. And so give me that guy and that family any day over just a deal that pencils out that I'm hiring somebody random for.
Right.
Like, give me the people. So another one, the tourism company that I'm buying is with another guy. Literally just had his first kid, was on paternity leave. He was a sales director for a tech company. Came back from paternity leave, was making like $300,000 a year, got let go. His entire organization got disbanded. And then he's like, I don't got a job now, like with a new kid. And he was like, okay, I'm either going to go find a new job or I'm going to buy a freaking company. He's like, I'm going to buy a freaking company. And I talked to him that day and he's like, I'm doing this. He's like, I'm making it happen. Watch me. And I was like, I'll bet on you any day of the week, dude. And I was like, get a deal that's within this buy box for me. And if you bring that deal to me, like, I'll fund it. And then they found the deal, the Alaska tourism deal. So I'm not out there like looking for specific industries or anything. I'm looking for my people that then bring me the deal. And if the deal fits within a good enough buy box and there's enough meat on the bone for me to make my return,
Mm-hmm.
then I'm like, I'll back you, dude. And then the guy that did the kitchen hood company, like, that guy was already in the local market in the same industry, in the restaurant industry,
Mm-hmm.
for his W-2. And so he was able to leave that after our second acquisition. So now he's doing that full time. And then now we're doubling that company. So it's a blast, dude. So every single check that I write gets somebody out of their job. It's really, really fun.
Yeah, that makes sense.
And into being like a
That's what they're in
CEO.
your community to actually do, right?
Mhm.
And you get to actually help them out on the backside too, which is really cool.
And it took 2.5 years to like build that up and to build that flow up, which is why it's like my unique ability right now. So everybody needs to look for what's their unique, superpower. What's the one thing that they've got like over the rest of the market, and you need to like 10x down on that strategy. So for me, if you're like zooming out, if you look at my strategy, it looks really random and discombobulated. When you look at it from a 30,000 foot, you're like, okay, dude, you've got like a travel company, you've got this mastermind, you're doing a hotel, you're doing all of this different stuff. Like, what's the thesis here? Like, what's the investment thesis? And my investment thesis is people. So I'm like, I'm going to have the best and brightest partners, and I'm going to create this like spotlight for the best talent in corporate America to come into my world in this aggregator. It's almost like what they do at YC, like Y Combinator.
Mhm. They pick for
Yeah.
the people in the team more than the
and they
actual-
bring the best and brightest talent, and then they're just like, we don't really care what you do, we just believe in you as the operator and as the founder, and we're going to back you. And then, there's some swings and misses, but overall, like, that's the strategy that I'm going to be doing for the next 3 to 5 years. And then just ask me how it goes at the end of year 5, and I'll probably change it by that point.
We'll book you for another podcast
Sounds
in
good.
advance.
Yeah.
What are some mindsets that you've gathered from people, less technical investing side, but from successful people now that you've interviewed over 400 people, right? That are what, millionaires?
Yeah, multimillionaires. Yeah, the normal guests we've done 879 podcasts. We probably interviewed like 600 some odd. Like, most of them are between 5 and 50 million. A few billionaires as well. So some mindsets and like wealth building advice that I've gotten from them. The number one that keeps coming up over and over and over again is, it doesn't matter as much about the how as it matters more so about the who. And whoever you want to become and whatever you want to do, it, like, stop researching it, stop reading all the books, stop listening to all the podcasts. Literally just find out who does that, and then become obsessed with where do they hang out, how do they act, how do they move, like, what do they care about, how can I add value to them?
Mm-hmm.
And that needs to be your only obsession, your only focus. And then you go add value to them with no expectation of return. You just say, hey, I pay attention to your content. You said you needed this. I did it for you. Like, hope you enjoy it. And then so that's where I live. And that's where I see even 8-figure, 9-figure guys and girls, like, they do the same thing with billionaires. Like, everyone does the same thing over and over and over again to be able to get into that room. And once you're in that room, then you're able to participate in that environment, and then that's where you find how to do it. So that's what I do constantly is I'm trying to level set and like level jump to the next room, to the next room, to the next room. And then what I do right now is I ask, like, who's the $20 million version of Brian Luebben? Who's the $20 million version of me? And so what I do is I go and I find other people that are $20 million net worth already. And I say, okay, I hang out with them. I'm like, what do you do? How do you think? What's your team look like? Like, how do you move? How do you operate? What's your relationship like? Even what's your marriage look like? Pay attention to all that stuff. And then I just bring all of those actions and all those habits and all of those even locations that they're hanging out. I just bring them into my life today so that the only discrepancy between where I'm at and where I'm trying to go is time.
Mm-hmm.
And then so time is the only uncontrollable between the two because it just takes time, and so now I'm in that journey, I'm in that process. And then that's where a lot of my confidence comes from is I'm like, okay, I have validation that I'm doing the right things repeatedly. And if you do the right things repeatedly at a long enough time horizon, you will be successful. It's just a simple formula for success and wealth. So that's what I do. I don't really try to rock the boat or reinvent the wheel.
Mm-hmm. So you've actually had a lot of success. You said 2.5 years later, you've got a big mastermind of people who are wanting to quit their jobs.
It's crazy.
You had to work pretty hard, I think, to do that. I see you doing podcasts every day. You've done 800 episodes now in that time frame as well. So how do you like negotiate between balance and working really hard towards your goal?
So before, I think everyone has the season that they need to go through where you just don't do your best, do what's required. That's my favorite Alex Hormozy quote. And so I did that for 2.5 years. And so there's two switches that you must flip. So one is like the action switch, and the next one is the consistency switch. So the first switch is action. Like, you just need to be a maniac. Like, you need to do what's required. You need to stop thinking about how you're feeling. Oh my God, I'm so burnt out. Ignore that. You have to push through, but just remember that switch is for a season. And then that's what was required for me for the last 2.5 years. And you've been around, like me and you did our first podcast interview when I was in the process of building this. So you've watched me build this from scratch and in 2023. And so I just did what I had to do to pull this off. And then now that I'm on the tail end of it, to where now we've got enough profit to kind of redistribute and build the team up and build the partnerships up. Now I'm flipping the consistency switch to where now me making content every single day, me doing stuff every single day, me, grinding every single day doesn't yield the result that it used to. So I'm now to a point where everyone will inevitably get to where more work does no longer equals more money. So now me working harder doesn't move the needle on the business. So me working smarter, me working more efficiently, me working better at scale is what moves the business. And so I've got other people that kick the doors in and take names that are the hard workers on the team. And I hire those people and I partner with those people. So now I'm actually in a season of less is more. So now I'm taking time to, kind of eliminate. So before it was, okay, cool, I want to add. Yes, 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 took me to where I'm at. And now it's no, no, no. What can I remove, delegate, or eliminate out of my world to where I can keep my main thing, and actually like eliminate all other focuses. So that's what I'm paying attention to right now to scale up to the next level.
What's something you've eliminated in the last few months?
I say no to a lot of deals. The majority of deals, I get opportunities kind of left and right now.
Yeah.
So the majority, I've probably turned down, like right now I'm doing a hotel development because I really, really enjoy it and it's part of my vision. And I finally found like the people that I want to partner with to pull that off. So I'm really excited for that. But I've turned down probably 100 or 200 other like GP or co-GP opportunities.
So you said yes to the hotel development because you like the person, not the actual deal as well, or?
No, both.
Okay.
Like, because when it comes to raising capital, it's like the deal's kind of over everything. Like, you can be the nicest and best operators, but you're like, all right, like, let's make sure that the actual deal pencils.
Mm-hmm.
So I think what most people are looking for and what I look for as a passive investor myself is, okay, like, number one, like, the people, like, who's actually running the deal? Do I know, like, and trust them, and are they competent? And number two, like, how's the actual deal itself, right? So besides that, I'm saying no to a lot of functions in my company. I'm not the one that's running the day-to-day of Action Academy anymore. So we hired a few people to like be in and like sit in the actual leadership seats of the company, and they're growing and scaling the operations and the fulfillment. and they're doing it better than me and more efficiently than me. So when we're doing our annual, like our weekly meetings, like if I'm not on the meeting, it's actually a better meeting because I'm kind of like the yapper and the vision guy. So now they're running really efficiently and I'm able to go focus on my seat, which is sales and marketing. So I'm out there, like my primary job in Action Academy is to make Action Academy known.
Mm-hmm.
That's my goal. So now I'm flying across the country. Like I'll be in Vegas on a Tuesday, I'll be in Boston on a Friday, and I'm going all over the place to do these in-person podcasts with like awesome people where I'm a guest and I'm hosting other awesome people as well. And I'm making those connections, I'm building those relationships, and I'm really just advancing and shining the spotlight on what we do.
Right. It's something you can uniquely do that
And
other
this
people couldn't, right? It'd be very hard for you to hire somebody external to like do that work.
delegate everything besides genius.
Mm-hmm.
And not to say that I'm genius, but it's just it's a quote that I think everyone needs to appreciate, which is what is your zone of genius? And then you only operate in that. And the more that you can operate solely in your zone of genius and delegate, elevate, automate everything else, like your life will be better because people don't burn out from work. They burn out because they're doing the wrong work. So I learned that from Dan Martell, who you know as well. Yeah.
Right.
So he taught me all about that and like how to like do the buyback ladder and you buy back your time through hires.
Yep.
Yeah.
What else have you learned from interviewing people like Dan on your podcast? He's got a lot of one-liners that are very memorable and pretty impactful if you really think about it.
Yeah, Dan's got a lot of one-liners. A lot the biggest takeaway that I've had from them is to not try to play the Dan Martell game. Like I don't want to be Dan Martell. I don't want to be Cody Sanchez. I don't want to be Alex Hormozi. I want to be the best Brian Luebben that I can be. And so you can take their frameworks and take their stuff, but like the more that you compare apples to apples, like it's just a losing game. And so I take bits and pieces of what I learn from these people and like ideas that they have and quotables that they have, and I bake them into my life and my business. Then I try them on, and then I'm like, oh, do I want to keep that idea or do I want to try something different? And you just experiment until you figure out what's your flavor of you uniquely, and then you just 10x that and you mash the gas on that. So that's what I'm doing right now because I mean I just am exposed to so many different ideas on things. Like
Yeah.
even with investing, I was like, holy dude, like, do I want to do storage, multifamily? Do I want to flip houses wholesale? Like, what do I want to do?
Right.
Yeah.
It seems like everything you're doing, that you're doing it with so much natural conviction. It's like doesn't feel forced. It does feel like you're doing the best version of Brian Luebben, but it can be really tough to navigate what that is for you if you're not a person who's done something yet. But there's a lot of options. Like it's very overwhelming to figure out. But I think like hearing perspectives on podcasts like this, naturally people are like, oh, that makes sense to me. But then other people are like, oh, no, that doesn't sound like what I want to do. It's kind of funny how just through listening, consuming, people gravitate towards what they gravitate towards. And I think that's kind of what you're talking about there
Yeah.
with like, do your own version of you.
Well, making a decision is better than no decision.
That's
so
true.
A lot of people are weighing 9 million options and 9 million possibilities and 9 million paths. I'm like, it's best to just walk it. Like pick one, try it out. People view life like a sit down 5-course meal, but that's not how life works. Life's like a freaking food court at a mall. So you go and try out all the different free samples, and then you figure out which one you like the best, and then you sit down and you have the meal after you try the free sample. So you can go try 3 or 4 different free samples before you determine like which one you like the best. You're not gonna marry the first woman that you date or the first man that you date. Like you date. So if people apply the same logic that they're using for their investing in their career to like their relationships, are you not going to go on a date because you are so nervous about like who your actual like spouse is going to be? Like, no, you're going to experiment. And so everyone says they have analysis paralysis and that's what's preventing them from taking action, but that's untrue. Like they just have friction because they're afraid of the unknown. So if they just go out and try, like that's how you learn. And it's only analysis paralysis, or it's only shiny object syndrome is the word I'm thinking of. It's only shiny object if I'm doing what I'm doing right now and I've got traction and momentum, and then I stop to go do something else completely. Like that would be ridiculous. So most businesses don't die from murder, they die from suicide, like unintentionally, because they just focus on like not the competitors, but they take their eye off the freaking ball, their own company. And then all of a sudden they just self-sabotage themselves back into freaking mediocrity and non-existence.
Yep.
Yeah.
Well, I introduced you to Chris earlier. He does social media for me full time, but he has his own social media for his own fitness business, and he's 23, young guy. I usually like to give him an opportunity to ask his own questions after listening to a podcast like this. Do you have any questions?
I do have one.
Come over here. Yeah.
Tagging out.
So you said that a lot of these high W-2 earners, right, are like their jobs are kind of just not, being created, or even they're just not a thing anymore, right? So it's like, what's like the main reason that, because you've obviously talked to a lot of these people, so it's like, what's the main reason that those jobs are like dissipating?
So I think right now, especially like in tech and in the economy, like there's just people that are downsizing. So I can give like a general reason, I can give like a specific reason. So the big reason is that companies, when the markets are good and the economy is good, they hire a bunch of people because they're anticipating a lot of growth, a lot of growth, a lot of growth. So you hire more salespeople, you hire more operations people, right?
Mhm.
Because you're anticipating that you're going to grow at this certain rate. As soon as there's some uncertainty in the economy, and then your company is like, you're not sure that you're going to grow 20% this year. You actually think you're going to go down. You actually think you're going to have to raise prices because your margins are lower. Then at that point, when you have uncertainty and you feel like the market and the economy is going to go down, that's when you downsize because your payroll is your largest expense. So a lot of these companies, it's just like they're playing defense right now because they're not sure what the economy is doing. And so now if you have a team of, 1,000 sales reps, you're like, oh, well, that's a lot of money. Like, let's just cut that down to 500 and we can still operate the company, the same that we could do it before. Same with engineers and AI. People are like, oh, we can get AI, like give me 500 engineers with AI capabilities and AI expertise, and they could do probably the same work as, 2,000. And then also like offshore as well. People are going offshore to, kind of get talent like that.
Right.
So all of those combined is kind of what we're seeing today. And at the end of the day, it's just, if you're working in corporate, you're just going to be another number. So even like, I'm not against employment, like, because I employ people. I've got 12 people on my team.
Right.
But, at least if you're on a small team or even like a DealMachine team, people, they know each other. It's like, the faces, the people. It's like, what's going on in their lives. But once you're in corporate, you're employee number 642. Like, nobody cares about you or knows, likes, and trusts you. You're just going to be the line item on the expense sheet.
Right.
Yeah.
In relation to like the name corporate dropouts,
Yeah.
how do you feel about college in general?
Yeah. I think that college,
There's a lot of people online that call it a scam now. And it's almost like a bandwagon sometimes, but sometimes they have decent reasons.
Going back, looking at college, I wouldn't call it a scam necessarily, but I think that one of the biggest issues in America right now that we're not talking about is the idea that we're taking 18-year-old kids and we're saying, I need you to decide what you want to do for the rest of your life with zero training, zero explanation, zero help. And then the banks are saying, okay, by the way, we're going to take all of that indecision and we're going to give you a massive loan so that you can go anywhere that you want.
With a high interest rate.
Insane.
Yeah.
Insane. I think, so from that perspective, I think that the college system is a scam from that perspective. With that being said, I went to a small D2 school and I worked my way and I paid my way through it because I could afford it. And I got a marketing degree. I couldn't tell you a single thing that I learned from college. And I think that the majority of people would say the same. But I did learn how to like be a human, learn. It was a good transition period between high school where you're completely dependent and then also like becoming a full grown adult. And those are some of the most fun years of your life. And so what I'm going to do personally with my kids when when I have my children, I'll be in my 40s and 50s by the time that they go to college. I'm going to make sure that financially they know how to invest, they know how to run their own companies, they know how to do all that stuff themselves. And then they can make the choice to go to college. So if they do go to college, they're going to go to college to make friends, to network, to learn how to actually like work with people and alongside people.
Right.
not for the actual degree itself.
Mm.
But I think the idea that we're investing $30,000 to $100,000 for this piece of paper that has no return on investment, no guaranteed return.
Mm.
I'm like, hell, you can go put $30,000 to $100,000 into a rental property, and at least
Right.
you have an on paper return. So
Mhm.
I think it's all about choice. I don't think it's a complete scam, but I think most things in life aren't like black and white. It's all
Right.
gray.
Right.
Yeah.
Well, Brian, I just really wanted to say thanks for stopping by today. It was good to catch up after, we did the episode in 2023.
Damn. Yeah, it was that long.
I'm thankful to call you my friend, and you're a very smart guy. I really enjoyed hearing, especially the mental side of what you've learned from talking with so many successful people. I look up to you in the ways that you do your content. We
Appreciate
do investing in very different ways,
that. Mhm.
and appreciated the opportunity to ask you some questions about why you picked that strategy.
Yeah, and I like that you pushed on it too, because if I want anyone to take anything away from this, is there's a million ways to make $1 million. Like there's so many ways that you can do it, and there's not one way that's like the right way. So they can do it my way and they could be wildly successful. They could do it your way, they could be wildly successful. All that matters is that they pick a way to start. Period.
Well said. And
Yeah.
I think a great way to end is just pick something and go take action.
Absolutely.
Yeah. Well, thank you again, Brian. I appreciate it.
Thanks again, brother.
Yep.
Thanks for having me.
Thanks for listening to the DealMachine Real Estate Investing Podcast. Please leave us a review and follow along wherever you're listening to your podcast.